Hey, what's up? In this video, I'm going to teach you how to become financially literate. As a CFO of a company that has 400 employees and does $100 million in revenue, I think I've learned a few things that are going to be really helpful and that are applicable first and foremost, because I think that accounting is one of those things where you got to make it applicable so it sticks. So this is what I'm going to do first is I'm going to tell you what I think financial literacy actually means. And this isn't something that you're going to find in the dictionary, but my belief is that financial literacy really just means that you're able to read the financial statements. And if you can create it, that's even better, but you don't have, that's not a requirement. If you're somebody like me, CFO, or you're in accounting, you need to be able to know how that works. However, if you're an investor, a business owner, or even banker, for the most part, that's all they're looking at is the financial statements. They're getting a better idea of what is really going on, the health of the company. And so it's kind of like a doctor in some regard. When you're looking at the financial statements, you're looking at the overall health of the company, just like a doctor's going to check multiple different areas. They're not going to just, do the little hammer thing on your knee and make sure your knee's good. You'd be like, what the hell? So it's like when you're doing a deep dive into a business, you want to check these areas. And I'm going to show you how to actually do that. So the first thing is that you need to be able to do something that's called a PFS. This is the first place I'm going to start. Now, most people don't do a PFS unless they're getting a loan or line of credit from a bank. However, if you do a PFS, that's the first place that you should start, especially if you are starting from zero, because you're going to understand how the financials actually work. So, and I'm going to share with you how the PFS works. Right here. And basically, the first thing is the balance sheet. So the balance sheet is just listing out the different assets that you own. So if you have a checking account, your savings account, if you have some cryptocurrency, if you have your home value in there, maybe you got some vehicles that are worth so much, coins and bullion, basically anything that you own that you can sell now that has value, significant value. I wouldn't really put my clothes or anything like that on there unless they're, were designer or something. But something that you can sell that has value, basically. And then your liabilities are the debts associated with such assets. And so if you have credit card, right, you have $10,000 in credit card. It could be loans, notes payable, anything like that. If you have tax liability as well. So you're going to have your vehicle. If you have a loan for your vehicle, your mortgage, it's going to show you those differences, right? You're going to list those out. And then you got your total liabilities, and then you have your net worth. And so net worth is just assets minus liabilities, and that equals your net worth. So when you hear people talking about celebrities and stuff and their net worth, that's what they're doing, is they're just taking, okay, how much money or assets do they own, and what are their liabilities estimated usually, and then that comes up with their net worth. So that's the balance sheet in a nutshell. I highly encourage you to do that, and I'll make that available for you in Excel or Google Sheet or something like that. And then you got your income statement. So the income statement is just your monthly income up here, your paychecks, like how much you hits your bank account, and then you got your monthly expenses. So it's going to be all those different expenses, right? That is your income statement. So it's going to say net income, monthly $440. You're putting some money in savings here. So maybe you could roll it over to savings or something else, or it's just however you want to look at it. And then on this side, it's showing you from an annual basis. Okay, so if we make $9,800 a month, take home, that's going to be after taxes. It's the money that's hitting your bank account. That's the number that I'm using here. If that's going in there, then that's what it's going to look like from an annualized basis, and the same with your expenses, because it's really just cash flow. You're monitoring the cash flow. Your gross income is going to be everything before taxes, so that you don't want to put in there. You just want to use this. And then this is percentage of expense. So if you have, let's go over here real quick. Let's say your mortgage, for example, is 23% of your expenses, so 23% of the 9,300, and then of your income percent, it's 22.45. And so now you can start to analyze, like, what percentage is this costing me on a monthly or annual basis? So you can see like your car insurance is 2% of your income on a monthly basis, right? And so the thing in here where it's changing, where these numbers change, is because there's a one-time bonus. So maybe some people get a bonus or something like that, so you can factor that in as well. And so that's making all the difference, because you can see like, hey, things are kind of tight during the month, but after we get that bonus, we got some annualized money in there that's okay. So that's the PFS in a nutshell. I know it's very quick going over that, but it's really that simple. It's just creating this so you understand on a monthly basis, on an annual basis, what are your expenses. You're just going through your bank statements, go back the last 3 or 4 bank statements, and really start to hone in on your reoccurring monthly expenses, and come up with a great estimate for like your groceries and that sort of thing, and just really plug those numbers in, and that's the first place to start. Now the second place is going to be in QuickBooks. So what's cool about QuickBooks, and I'll leave a link for this too, is that QuickBooks, if you don't have an account or anything like that for them, that's totally fine, because they have something called a sandbox, and that allows you to jump into their system. You don't have to have an account, and you can kind of play around with their system and get a better idea. So we're looking at Craig's Design and Landscaping Service. This is just a sample company. And if you go to the reports section right here, you go to reports, you can see that they have a profit and loss, a balance sheet. They also have all other different types of reports, and I highly encourage you guys to go through this stuff if you're just familiar. QuickBooks is a great program. It's pretty simple to use, and it's going to give you the layout and the principles, mainly for all the different accounting softwares out there are pretty similar. There's certain principles and stuff that they have to follow, but what we're going to look at is the profit and loss. And you can see it's kind of the same thing that we just went over. The only difference is that there's going to be cost of goods. So I'm going to collapse this view real quick. And so you can see you got your income. So this is what we're looking at, guys. So the thing about the profit and loss is there's periods. So you have to understand that you're looking at a certain period. It's not an ongoing report for the profit and loss. It's a set period. And that could be by a week, it could be by a month. You can change those things right up here. You can also change the accounting methods, so cash versus accrual. And I'm not going to get into that today, what those differences are. But you have total income here, you have your costs down here, and so it's just showing your net profit, your net income. And that's really it. Look, you got some of the similar things on here. You got your utilities, you got your rent, you got some meals. So when you're looking at this thing, that's all it is. It's just a math formula. It's revenue minus expenses equals your net. That's really what it is. You got your cost of goods up here, which your gross profit, you're going to have a margin. When you hear gross profit compared to gross margin, all they're talking about is a percentage or a dollar amount. So if it's gross margin, it's going to be a percentage. If it's a gross profit, it's going to be a dollar amount. So that's it right there. And we're looking at this from an accrual basis. So you got these little notes, so you can see like when this report was generated and the time period. So those things are going to be important to look at. Now the next thing here is the balance sheet. And the balance sheet is just the same thing that we looked at earlier. We're going to collapse it so we get a better little view of it. You got your assets, so you got your total assets. It's going to break all those things down. It's going to be your cash, your accounts receivable, so what people owe you, how much money people owe you, your inventory, your vehicles, and then you got your liabilities and equity down here. So what's different about this is that total assets must equal total liabilities and equity. So that's just the very slight change from the PFS balance sheet and a business balance sheet. Total equity is net worth, but it's potentially spread. If there's more than one business owner, it's going to be spread between those business owners based off of the percentage of the ownership that each business person has. So that's all it really is, though. And so when you're looking at this, you're seeing, okay, you got your assets up here, you got your liabilities. It's going to be like your accounts payable, what you owe to other people, other vendors. You got your credit card debt, you got some tax liabilities. You got some long-term notes, which is maybe a vehicle, or it could be, who knows. You can click on it and find out. Looks like a journal entry of some sort. We're not going to get into that right now, but so you can see, okay, you got a loan here. Let me get out of this. Come on. And then you have your equity down here, so your total equity. So they're negative here, so it means that they're basically paying to keep this thing going. Because if you look right here, their total debts are well over their liabilities. So just from instantaneously, I can tell that the owners have to put money in. So that's the value of looking at the financial statements. Now the other one is statement of cash flows. And we're going to look at this. And so the statement of cash flows, all that's telling you is the cash at the beginning of the period right here and the cash at the end of the period. And it's telling you how that cash went in and out. So the inflow and outflow of cash. And there's 3 different ways that cash can come in and out of a business. It's through operating activities, so it's the day-to-day operations of the business. It's through investing activities. So it could be selling an asset or something like that. It's things that are kind of outside of the operations. And then it's financing. The financing could be getting money from the owners. It could be through loans. It could be through, those are going to be the main things. And so it's separating how the cash actually came out, and it's also giving you a beginning period and an ending period. So that's really that, for the financial statements. It's pretty simple for the most part. Yeah, you can drill into the weeds of it, but here's where I want to jump into next. So we're in Yahoo Finance right here, and we're looking at Tesla, for example. And if you go to just type in Google Yahoo Finance or whatever, or Tesla, you type in the symbol in here, whatever company it is that you want to look at, or you're potentially wanting to invest in. Then you go to financials, and you're looking at the income statement, balance sheet, and cash flow statement. So you're going trailing 12 months, so that's current, and this is last year, this is the year before, and so you can kind of see where they were prior. And this is free. This information is free. You don't have to pay for any of this stuff. You can go in and just look at these companies. And so it's telling you the revenue. It's telling you the cost of goods, the cost of revenue. It's really just the expenses. How much did it cost to produce the $96 billion? And then you're just kind of going down here, looking at the different operating. So there's going to be a little bit less detail. It's going to be kind of summarized information, but you can start to go. And this is what you do: is you grow through each and every single one of these line items. And if you understand it, great, but make sure that you actually understand it. And my suggestion is that you open up another tab, like to Investopedia or something like that, or just even Google is fine. And if you don't know something, what it means after you go through, like what is working capital, you type in, define working capital. You could even use ChatGPT for that or something, have that open in a side window, and you go through, and in literally within an hour, you can go through all these different things and find out the meaning of exactly every single one that you don't understand, or if you need explanation. What is EBITDA, for example, and what's the difference between EBITDA and EBIT? And so that's where you start with the financial literacy. You start with the PFS, you go to something like QuickBooks or something like that, and you start to understand how it looks like from a small business level. And then you start to look at the big boy companies, and then once you understand, because there's going to be a lot more information, things that you're going to need to look at, like earnings per share, the EPS. What are those things? Start to go through and analyze this information, and you're going to make sense of it, and it's going to be a very beautiful and valuable thing for you. So hopefully that's helpful for you and gives you a good track of where you actually need to go. And I'm not kidding you, within a few hours you're going to be way more knowledgeable than everybody around you if you just follow these steps and you actually dive into each one of these line items, each one of these accounts, and you understand what they actually are. And that's how you read financial statements, and that's how you become financially literate. Thanks for watching.